Chris, first of all, what did you make of these numbers and the pronouncements?
Well, the numbers themselves were not a great surprise. The company had guided the outlook for the full year about a month ago. So no one going into yesterday's briefing was surprised by the scale. The bigger question really on investors' minds was around the buybacks that had been announced as well, and whether there would be asset sales to basically enable the scale of buybacks that they had promised. And I think coming out of yesterday, the big positive was that these asset sales have begun, and that the company has already effectively pre-sold $11.5 billion worth of Alibaba stock in order to let these buybacks commence.
All of this has got to also go down to Masayoshi Son's credibility, doesn't it, Chris? I mean, he started off this whole presentation with this picture of this ascent of a picture of unicorns toppling off a cliff into what he called the valley of coronavirus and then magically flying out of the abyss. Then he said that he was misunderstood, just like Jesus Christ. What is left of his credibility now?
I must admit, some of the slideware that SoftBank uses is a little bit non-standard, and that slide in particular did draw a lot of attention. But the point I think he was trying to make was he has invested in unicorns, but despite their status and despite everything that we attribute to these highly valued startups, not all of them will survive. And the point that he was trying to make was that, you know, out of his portfolio of roughly 90 investments made by that first fund, he was very public that he thought as many as 15 of them would go bankrupt. But at the same time, he still saw value and upside in another 15, right? So, you know, we can look at the loss and say this is an incredibly large number, which it is. But if you actually go back and look at the cumulative investment that has gone into the Vision Fund, which is $81 billion over the last 3 years, the current value of the fund after all the write-downs is $80 billion. The write-downs, the total net impact after all of this is still only $1 billion. And yes, it was a terrible year, but last year was actually quite a positive year. And like all things, the markets go up, the markets go down. Berkshire Hathaway is down. Every investment portfolio is down. So to think that the Vision Fund would also be down, and it is, it's down about 11% this year, but that's still a relatively good performance in light of what's going on with coronavirus and in light with investment portfolios in general. So, you know, yes, some investors will question Masa, but I think at the same time, if you actually look at the performance, it's maybe not as bad as people think.
But Chris, it does seem like the tide has changed for SoftBank. Do you think that will prompt a change in strategy? I mean, prior to all the noise that we're hearing right now, the strategy seems to be, you know, for SoftBank startups to grow and almost grow at all costs. Will that change?
So we were getting signs late last year that was changing. The company basically instructed all of the founders that they had to find a path to profitability, that they had to prove unit economics. So basically they had to prove that economics worked at a single unit level, whether that be a WeWork outlet or whether that be a production unit of production. And if those unit economics were there, they would help scale. They've also admitted that in the past, they had it a little bit the other way around, which was grow, and that if you grow fast enough and outgrow your competition, you will be able to develop the economies of scale. So the thinking has definitely changed. The thinking actually started to change around October of last year when WeWork imploded. And actually that was a good thing because these companies have all been being pushed in this new mindset of demonstrating a path to profitability 6 months before COVID-19 hit. And so for some of them, it's actually given them a little bit of a head start maybe on others in preparing for what could be a very, very severe downturn.
What's also changed is the board. Does that necessarily make Masayoshi-san more accountable? Some say perhaps less accountable because someone like Jack Ma is no longer around.
So, I mean, I think this is a good question, and certainly Jack Ma was a peer that could, if anyone could influence Masa, you would think a person of Jack's stature would be one. In general, I think having more independent board members is probably a good thing, particularly if they are given the right to speak up and express dissenting opinions. It did feel a little bit like an old boys club. And you have to remember, Masa still owns 25% of the company. And so, you know, even a dissenting board is still going to ultimately probably concede on something that the founder and majority owner wants to do. I think the question for minority shareholders is that dissenting voice there? Is the proper debate happening? And I think increasing the size of the independent or the number of independent directors on the board ultimately will be a good thing. Whether that really changes anything, only time will tell.
But time will tell if it's a success in the long term, Chris, won't it? And you are of the belief that it will be a success, but it'll be contingent on finding a couple of big winners here. And looking at the stable that they have, are you confident?
Well, there's definitely some in there that are winners. And, you know, TikTok on social media has been taking over around the world. Excuse me, with their videos, very popular amongst teenagers, et cetera. That is growing very quickly. As you mentioned in the preview, food delivery is an area of outstanding growth in this period of social distancing. SoftBank has numerous investments in those types of companies as well, from Uber Eats through to DoorDash. They've also got interest in biotech companies that have been booming in this period, as well as Slack, office productivity, which has been growing very quickly as people work from home. So, you know, it is a portfolio. There are clearly some elements of the portfolio that are doing better than others. But of the listed companies that have come out of the portfolio, SoftBank's actually ahead. Those that have gone to market, even despite the softness in Uber's share price, the net value of the entities that they have listed so far is still positive. So, again, we won't really be able to judge for 3 or 4 years. But I think there's a degree of confidence within the management of the Vision Fund that there's enough winners that they will be able to offset the losers and still come out ahead.